All right. I think let's start, and exciting to see so many people joining. Everything from people who are investors across venture capital to advisors in Antler and other ecosystems, and founders and other people building great stuff. And I think for a lot of you, you've been involved in different versions of this call in different formats, and we're trying to combine a few quick updates on Antler, but really share some of the research and learnings that we're making across all the work that we do across all the geographies we are working in. And with me on the call today, so quick recap, my name is Fridtjof Berge, one of the co-founders of Antler and the COO based in Singapore. I have with me Rosalind Basani, or Ross, who joined the team earlier this year, also out of Singapore. And of course, Ollie Forseth, who's calling us from Stockholm. Is typically based in London, but he's visiting Stockholm, hopefully at a beautiful time of the year. And I think we'll just jump straight into it. And I'll give a few updates from the Antler end, and then afterwards we'll hear from Ross and Ollie on a few other topics. Most of the things that I'll be mentioning and talking about, you will be able to read more on through the links in the document that you've hopefully have received. If you haven't received it, just drop Ollie a note. I think on the Antler end, we've done a lot of sort of work in the background, talking to a lot of really great people across a number of ecosystems, and it's very exciting to finally be able to talk publicly about some great team members and great geographies that we have entered with essentially the Antler model. And three of them are South Korea, Indonesia, and Vietnam. In South Korea, we have Jiho joining the team, terrific entrepreneur from the Seoul ecosystem, and working now in the coming months to really ramp up that team and start working with founders in the earlier parts of 2022. Similarly, we have Subir, who is coming also as a serial entrepreneur, most recently former CEO of Rocket Internet-backed Carmudi, based out of Jakarta. Will be working on our Indonesia setup. Just going to pause for a second and admit everyone. I think I'll remove this feature for the next call, but just adding some latecomers. Similarly to Indonesia, Vietnam is also on the list of kind of new places where we are starting to work with entrepreneurs. And Eric Jonsson, who comes from having been a managing director of Zalora in Vietnam and having been building different companies in that part of the world for well over a decade. He's also joining that setup. And the thinking with Ho Chi Minh and Vietnam, Indonesia out of Jakarta, is that it will be a lot of collaboration and hopefully good synergies on expertise and ability to support founders with the existing work we're doing already in Southeast Asia out of Singapore. If I move on to some events we have happening around, hopefully you'll see this in our social media and in newsletters and other formats, but we have a demo day happening now at 4 p.m. CET out of Berlin. That's both an in-person and virtual event. Very excited about that, especially as it's the first one out of Berlin. Been a great team starting up there, I think, in a challenging time globally, but having been fortunate enough to attract some really, really great entrepreneurs working on very exciting startups. So check that out if you have the chance. Otherwise, I think there will be a recording available afterwards as well. And with a slightly longer time frame, we have tomorrow the CEO, or former CEO at Evernote, currently leading it's a company with an interesting name, is Phil Libin, who will be having a sort of fireside chat with Magnus Grimmeland, our CEO. And for those who don't know, well, it's essentially trying to refresh or improve how video chats, meetings, presentations become more engaging. So if a lot of people here are stuck in boring Zoom calls, then it can be worth learning more about that company, and obviously Phil's great background. And this is again open for all, and please share with anyone you think might be interested. In terms of content that we're not touching on today, but might be interesting, especially for people around in Europe, but I would say probably elsewhere as well, has been this mapping we recently made for the unicorn companies in the DACH region. So, the Germany, broader area around in that region of Europe. I think there are some interesting findings there. Not going to go into it today, but really good 101 on what's been coming out of that region in terms of both unicorns, but also I think we focus a bit on soonicorns with companies that are hopefully soon reaching that threshold and that milestone. We'll do similar mappings on other geographies going forward as well. And I think for any of these pieces that we make, I mean, we obviously find them interesting for our work, but it's a big aim that this is also interesting and resonating with everyone else who are interested in this space. So please shoot any feedback on what you like or perhaps want to see more of. Then quickly on a few very exciting portfolio updates. Marco, I think I mentioned in some other calls that maybe people have been a part of, is essentially a trade financing platform for LATAM businesses exporting primarily to the US. They've been really, I think, hitting a great product market fit, raising a lot of capital, a big debt instrument as well, enabling them to really scale fast, and I think most importantly, help a lot of up and coming exporting companies from LATAM to make it easier to work across in larger geographies such as the US. You see a picture of the co-founder team at the bottom there, Marco. Then some other news as well, the online B2B payments space with Sprink. You see the team on the top here, based out of Amsterdam, recently raised a good round, which received a ton of coverage in Central Europe. Very exciting to learn more about them if you're interested in payments and that space. And lastly, just mentioning Upflowy, reaching number 1, I think it was last week in Product Hunt. Let's see if they maybe become number 1 of the month at some point or even more. I think they're a great group of founders out of Australia, and I think also a lot of people on this call and in our broader community helped them by checking out what they do and by upvoting them if they liked what they saw. I think just before I'll hand it over to Ross, forgot to mention as well that please shoot any questions in the chat. If no one picks it up, then just unmute and make a small shout, and we'll try to address your question. And even if we don't, perhaps we run out of time, then we'll make sure to follow up with you afterwards on email or another forum. Good. So that's a few Antler updates, and I'll pass it over to Ross, who came into the team earlier this year. Great background in some really large asset management roles. She is working in our capital team, so obviously engaging with a lot of people looking to allocate in the venture capital space, but she's also very passionate about several topics in terms of how VC can become better and some of the changes that are perhaps coming. And she's producing a lot of the content that you can see from our social media and blog and newsletters. And one of those topics is obviously impact. I think it said on the previous page, and I'll hand it over to you, Ross, who can educate us a bit on some of your findings. And I appreciate again you taking the time to join the call.
Thanks, Fridtjof, and thanks everybody for joining today. Before I get into sort of ESG and impact, I just wanted to start off by talking about 3 high-level trends that we've seen happening within the VC industry. So the first is that investors are investing earlier in the VC life cycle. And we've seen several well-known VC firms recently announce their new seed investment programs. The second is that increased capital inflows are coming from both traditional and non-traditional investors, such as hedge funds. And then the third is that companies are being built anywhere in the world. And this is probably best illustrated by the chart on the right of the screen right now, showing only 22 cities with one or more unicorns in 2010. And this was mostly concentrated in the US and China, to today, where we see 170 cities from all over the world. And it's not just the number of cities that we've seen grown, but it's the number of unicorns as well. And cumulatively, since 1990, 1,600 tech companies have crossed that $1 billion milestone, and many of those have been born in the last 5 years. Globally, VC investment for the first half of 2021 hit a record of just under 300 billion. And this was almost as much as 2020 in total. Now, from a regional perspective, what we've seen is that China's share of global VC investment has been shrinking for the last 2 quarters. And this may be due to regulatory change across big tech, education, and gaming. And then we've also seen that Europe has taken the top spot as the fastest growing major region by investment, with strong flows coming from both Asia and US-based investors. Now, another trend that we've seen emerging is that of the increased importance of environmental, social, and governance considerations, or ESG, and impact. ESG within the public markets is mainstream. And Ollie, if you can go to the next page. ESG mutual funds and ETFs have seen a huge increase in assets. And it's now estimated that sustainable investments represent over 1/3 of all assets globally. And this trend is seen within the alternatives industry as well. And if we go to the next slide, Ollie. And you can see this with the Preqin survey results, which saw that 80% of respondents expressed an increased interest and demand in ESG strategies and capabilities. Not only have we seen a shift in investor sentiment becoming more purpose, people, and planet driven, the same trend is visible in the generations looking to build businesses that solve real world problems and align with their own personal values. And the VC industry is well known to kind of lag on being proactive on this topic. But if we want to retain and attract founders and LPs, we'll need to change. And regulation is, of course, a key driver for change as well. Now, the question is, what can VC firms do about this? Well, you can set firm level values and be able to demonstrate our intentions and purpose. You can integrate ESG into the investment process. We already know that an understanding of ESG risks and opportunities is needed to assess a company's true value. And then, of course, founder engagement. As early stage investors, we can instill sound company ESG practices and policy for our founders right at the beginning of their company journey. And this is likely to make them more resilient and more attractive, while also ensuring they don't run into challenges at exit. I just want to go back to that point number 1 about firm level values. So Antler's a signatory to the UNPRI, and we are supporters of the 17 Sustainable Development Goals, or SDGs. And the 4 goals that I've shown on this page are ones that we think we most strongly address at a firm level. And this is probably the case for most VCs as well. Goal 8, VCs can boost productivity and economic growth through job creation, education, and empowering individuals through entrepreneurship. And in fact, the absence of VC funding would lower global aggregate growth by 28%. Goal 9, innovation is essential for sustainable growth and economic development. It can also be the key to address global challenges such as climate change. But innovation can also create challenges. For example, if we think about frontier technologies, and I define this as AI, robotics, nanotech, and biotech, this is a field estimated to grow from around 350 billion to over 3 trillion by 2025. But many countries are completely unprepared for this growth. And this can actually create greater inequalities across countries. But VCs can help support workforces and schools learn new digital skills to protect people from negative consequences of innovation, such as job losses. Goals 5 and 10. Now, it's widely accepted that diversity and inclusion across gender, race, nationality, socioeconomic backgrounds can lead to more sustainable businesses and stronger returns. And it's definitely something that's worth our while to promote, not just with our founders, but also within the VC firms and our general hiring processes as well. I want to touch on gender equality because it has received a lot of press this year. And it's probably due to one provocative number that came out from Crunchbase. If we can go to the next slide, Ollie. And this was a report that stated female founders received only 2.3% of VC funding in 2020. But that doesn't tell the whole story. This number was just for female-only founders and is part of a much, much larger report. If we actually included male and female co-founding teams, the number increases to 11% of VC funding, as you can see on the chart on the left-hand side. And then if we break the dollar funding number down by stage on the right-hand side of this slide, early stage proportion has 14% female only and female male co-founders. So these numbers are a little bit better than the industry first thought, but it's clear there is still work to be done here. Research from McKinsey shows us that profit and performance can be up to 50% higher when women are well represented at the top. And despite this, only 12% of senior individuals are women in leadership positions in the industry. Sorry, if you can just go back one, Ollie, apologies. So Antler's breakdown across founders is more balanced than the industry, as you can see along the bottom of this slide here. And we think this is driven not just by our diverse network of employees and advisors, but by our approach to sourcing and due diligence. We believe unconscious bias can be increased if the investment decision process is too short. And as you all know, Antler spends on average 400 hours with founders during the Antler programs. It's been argued that VC firms are inherently impactful, not just because their companies can support development and growth, but because the solutions they offer can indirectly or directly improve people's lives and respond to some of society's biggest challenges. The important point to note here is that you don't have to be an impact manager to create a positive impact on the world. Next slide, please. Impact investing, responsible investing, and ESG factor-based investing are often used interchangeably. So we decided to actually define impact and what it means to us. And we estimate that this probably captures about a third of our portfolio companies. And I wanted just to highlight 2 examples. Marco, we've already talked about earlier. This is a company that's trying to solve the $5 trillion finance gap for SMEs through their digital trade platform and financing LATAM exporters. Now, Rebello is a company tackling the 54 million ton problem of e-waste. And they're trying to create a circular economy for electronics. And they aim to save about 60 tons of e-waste in APAC. Now, on an earlier slide, where we asked what VC firms can do about ESG, we suggested talk about it. And this is exactly what Antler is intending to do by publishing a report on ESG and impact in November. So look out for that. As an industry, we must also realize that we need to be pragmatic about this topic. Our role in the VC ecosystem is still to focus on attracting and supporting founders, helping to build the best companies in the world, and delivering strong investment returns to our investors. I do think, however, that it may be time just to add something extra to that final point and instead say we aim to deliver strong investment returns to our investors that align with their values as well. Thanks so much for listening, and please feel free to ask any questions. I think that I can see a question came through. Yes, so we're going to, in this report, we're going to be looking both at the VC industry, but also Antler as well. So we have a lot of data on our founders, but we must also be mindful of data privacy. So we can share what we can, but you will be able to see more of a founder mix. And it's also something that we're intending to publish on an annual basis. So they will get more and more data as we look out to the future. But very, very happy to get feedback on the first report of this. And yeah, I look forward to hearing from you on that. Fridtjof, that might be a question for you. So are we monitoring female portion of options and warrants within our portfolio companies?
Not sure actually to how to answer on the fly, but it's a question I haven't thought about. Maybe we'll check Ross internally.
Yeah, no problem.
I think well, I can get back to you, Jeppe, on that one. Thanks for asking.
If you do have any more questions, you can feel free to reach out to me directly, but I think I will hand over to Ollie, who is our global community manager. I learned an interesting fact about him today, that his birthday is on Christmas Day. So with that, I will hand over to him to talk about the attention economy.
Thanks, Roz. Very kind. Hi, everyone. Very nice to meet you. As Roz and Fridtjof mentioned earlier, I run our global community here at Antler. I joined back in January. I was previously at another VC fund called Draper Esprit, doing much later stage investments in the likes of Revolut and TransferWise, to name a few. Today, I'm going to talk about the attention economy. So in essence, how are brands captivating our attentions? I'm going to talk about what is the attention economy, how did we get there, a case study around TikTok, and also some of the trends we're really excited about. Why did we get interested in the attention economy? Well, I'm super interested, what are the next types of Gen Z products that consumers are going to use? Think about this, and maybe a question to the audience. How long do you think our average attention span is as of today? Well, while you think about that, when you last watched a Netflix movie or you played a game on your phone, whilst watching that Netflix program or texting your friends, you probably can't remember what happened in that program because you were so glued to the technologies. We call this the attention economy. Attention is becoming the biggest currency for brands in order for you to spend time and money with them in the coming years and months. Some of the, there are quite a few technology verticals here, and I was just going to talk about a couple that are captivating our attentions. So I'm just going to focus on social and entertainment. The biggest trend we're seeing in social is you no longer have to look for content or people to add on, let's say, links on Facebook. It automatically gives you personalized recommendations and personalized content. We will talk about TikTok in a minute, but the average consumer time spent on these social media companies is going up and up, all down to very personalized and automated algorithms. And the second trend we're seeing is around entertainment. I don't really remember Blockbuster, to be honest, but I was around when Netflix was coming to us on a global footprint. And this again is very around the personalized content and the personalized recommendations, but they're encouraging us to stay and spend more and more time with these companies. An interesting fact around Netflix, the average consumer spends 3.5 hours a day consuming content on Netflix. And this is just the beginning of the attention economy. So yes, a quick case study around TikTok. So TikTok is owned by ByteDance, one of the biggest Chinese tech companies globally. And they actually have two main social media companies. They've got TikTok and they've got Douyin, which is the TikTok version, but based in China. Each consumer product has about 700 million monthly active users. Combined, TikTok has had 2 billion downloads to date. And I think this is just the beginning. These social media companies could become our super apps, where we no longer need to go onto other websites to look for fashion or beauty products. We can all consume this in one app, such as TikTok. So a couple of trends that I think could happen in TikTok in the coming years is around commerce. If we're seeing our favorite creators shopping online or wearing products that we want to buy, there's no reason why TikTok can't automate that entire process for us. If you're following a favorite creator on TikTok and you absolutely love what they're wearing or the types of beauty products they're showcasing, TikTok has the opportunity to have that embedded functionalities and also products such as commerce and payments in the coming years. Creator monetization. Some of you may have seen the piece around the creator economy we did back in May. And a very quick summary, so it's not very confusing, but the creator economy are the underlying platforms that allow anyone, people like you or I, to monetize our unique set of skills. I mentioned again, if we're seeing the creators we absolutely love and follow, they're teaching us about education, they're teaching us about fashion or beauty products. TikTok has the ability to be the go-to destination to consume information, buy products, but also learn from our favorite people. We've seen a massive trend in this short form video content. I think there's a massive opportunity here to do the same, but for audio. So think podcasting, but shorter versions of podcasts right at your fingertips. Some of the next big verticalized technology trends that I think are going to become super interesting are as follows. Social shopping. We talked about TikTok being the go-to place to potentially consume and buy the favorite products we love consuming and to potentially wear. This, I think, is going to be just at the beginning. We're seeing this happening in China, and we're seeing the Chinese trends coming from east to west. Gaming. With 2.5 billion gamers globally, with a total addressable market of $260 billion, the next big trend in gaming is going to potentially be creator economy meets virtual reality and potentially virtual avatars. So to make it really simple, if you follow a creator you absolutely love gaming with and you want to game with them virtually, that person can not only be with you virtually, but they can also be next to you via virtual avatars. And I mentioned around the social aspect, audio, I think, is completely underrated right now. And I think this is going to be massive in the coming years. These types of social audio apps, or even the likes of TikToks, I almost see these as the new types of high school education, especially for the Gen Zs and my generation coming through the world. And as they start to learn more and more, maybe they don't want to learn from their boring teacher at school anymore. They much more prefer interacting with someone they have a virtual relationship with. So that's why I think the likes of Clubhouse and TikTok are just at the very beginning. And long term, we might see this whole title called the creator middle class. We're seeing a shift in how Gen Zs want to spend time, but also what they want to do for their future careers. We might see a shift where young consumers no longer want to become bankers, doctors, or lawyers. They want to write about information, they want to write content, and they want to share their knowledge to the world. That is huge, and that becomes a massive market for them as experts to monetize their knowledge. There is so much we could talk about, but I'm aware of time, but I'm super happy to do more of a long, deep dive into this in the coming weeks or months, but hopefully that gives you a quick insight of what's happening around the attention economy. And this is just at the beginning. I asked earlier, what are our average attention spans? As of today, the average attention span is 3 to 7 seconds. Bearing in mind, the internet has only been around for 38 years. Back when the time it was released, our attentions were 12 to 15 seconds. So the biggest question we're trying to answer is, can our attentions decrease any further? The next types of Gen Z or consumer users, what's their attention going to look like? Can it go down from 3 to 7 seconds any lower? Or are we going to see a complete shift from this going from 3 to 7 seconds, maybe up to 10 to 12 seconds, where the internet originally started? But hopefully it gives you quick insights. Happy to take some questions, but thanks very much.